Most traders lose not because they can't read a chart. They lose because they enter trades they have no business being in. You see a setup that looks good, you feel it, you enter, and then the market does exactly what it was always going to do. It takes your stop, reverses, and goes on without you. That's not bad luck, that's the absence of a system. Before I built the CAP protocol, I was making the same two decisions every experienced trader dreads. Should I enter this? And if yes, with how much? These two decisions, made in real time, while under pressure, with money on the line, they will destroy you, not sometimes, but consistently. The solution isn't more indicators, it's removing those decisions entirely. This is the Continuation Acceleration Protocol. This one's been fine-tuned specifically for Bitcoin, and what you're looking at is a result of hundreds of hours of building a framework that answers both of those questions before I ever touch your position. The protocol runs every setup through 43 layers of weighted analysis, organized across 6 confluence domains, from macro regime all the way down to 15-minute specific trigger points. Every single item on the checklist carries a point value. Add them up, and the protocol grades your setup on a nearly 400-point scale from F, fail, all the way up to S. But before the grading even starts, there are hard gates, required checks. Fail any one of them, and the trade is blocked entirely, not downgraded, but blocked. That single feature has saved me from more bad trades than I can count. And before I ever open a chart, every session begins with a 3-step macro ritual. It takes about 60 seconds, but it tells me whether Bitcoin's macro environment is aligned with my trade or hostile to it. If it's hostile, I already know to reduce exposure before I see a single setup. That's the container the protocol lives in. Here's a trade setup from earlier in the week. After moving up and going corrective, price decided to, with strength, break through structure. After that takes place, we map out our entire OTE zone, including all the fair value gaps and order blocks. And as price moves back down correctively, it tells us, with the combination of layers of confluence based on percentages, what probability we have in this specific pair and time frame for it to play out in our favor. Now what that means is it tells us how much money to bet, where to put our stop, where our entry is, and where our TPs are. So first, let's just go use the checklist. After identifying everything seen so far, it tells us this is a B grade. So that means use 50 to 75% of your normal risk. Now, all we do is wait. Whereas, compared to last Thursday, same asset, similar looking candle pattern, the protocol scored it at 91% though, an A grade, so full size position, no hesitation. Same market, completely different conviction. The chart doesn't tell you that. The protocol does. The difference between an F grade and an S grade setup in the system isn't subtle. An F grade, so below 50% confluence, carries an estimated win rate of around 38%. You're statistically expected to lose that trade. An S grade, 92% confluence or above, carries an estimated win rate of closer to 78%. Same asset, same market. The only variable is how many of those 43 layers have lined up. That number, 78%, is not a backtest promise. It's what the data shows you when you stop trading the noise and start trading only what the protocol approves. When you purchase any of the Masterwork or Foundation protocols, you get the tool itself, a fully built offline HTML application, no subscription, no login, yours permanently, the full 43-item protocol document, the reasoning behind every check, every weight, and every hard gate, the grading system with position sizing guidance tied to every grade level, and a pre-session macro ritual that sets the context before you see a candle. The question isn't whether the protocol works. The question is, how many A and S grade setups did you pass on this week because you didn't know they qualified?